Happy Friday, traders. It is 8:03 a.m. Chicago time on Friday, the 13th. Friday the 13th. Are you superstitious? It's January 2023. This is episode number 2392. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Sounds scratchety. Okay, hang on one second. Let's correct. Oh yeah, the sound is really amped up. You know, that's the thing with Windows. You use Teams or Skype or something and your sound just goes to absolute crap. Yes, it's set to 100 by some app. I don't know which. Cool. Thank you, guys. All right. So this should be much better. Cool. So let's jump right in. It is Friday. We're going to jump right into this convergent trading pre-market summary sheet. The posture is mixed to slight risk off this morning, and we're looking at a market that has kind of traded sideways in the overnight session, mostly across the indices, and just taken a drop right at the European Open and has been pushing lows throughout. The European market still holding up much better than the U.S. market. You can see that the DAX and Euro stocks are still up. They are up much stronger for the year than the U.S. markets for reasons I cited yesterday. This morning there wasn't too much to consider, but we do have earnings that started today. Key earnings that started today. We had United Health. We had JP Morgan. JP Morgan came in and beat by 16.29% on earnings. So they came out at $3.57 versus $3.07. And they beat revenue by 3.57%. So margins are increasing there. Bank of America beat by 10%. Wells Fargo beat by 1.5%. Citigroup beat by 1.75%. We also got Delta Airlines. BlackRock beat by 10%, and Bank of New York Mellon beat by 56%. This is not a tech startup or a new bank. This is a well-established old bank, and it beat by 56%. I guess analysts really were pessimistic on this stock. We don't have anything after the market, but hey, today's the kickoff. Today is a kickoff of earnings, and yes, I said slight risk off on the aggregate because the scale on the top right there uses all indices as a measure of risk, and they're being held up by the European markets. So for US, definitely risk off. For Europe is mixed, so the aggregates mixed to slightly risk off. So that's where that comes from. What's on the news? There's as I said, earnings expectations yesterday. Softer inflation data will shift Fed interest rate policy. We heard several times that the most likely course going forward is 25 basis point hikes from the Fed. The question now becomes, again, terminal rate, and then how long they will hold those rates up there. Rising expectations for the Bank of Japan policy shift. There's a meeting or an event relating to the Bank of Japan on Monday, I believe, that's going to be watched very closely. Tesla continues to cut prices. Tesla's down another 6% this morning, and it's really trying to retain its market share. Very soft sales or orders, and it's trying to stimulate that. Discovery reportedly exploring sale of music library to lower debt. ConocoPhillips open to deal to sell Venezuelan oil in U.S. And then for today, we had, before the market opened, we had U.S. import and export prices. The number to pay attention to today is Michigan sentiment. Michigan sentiment prelim has an inflation component. The inflation component forecast is 4.4%. 4.4%. That's going to be the significant part of this release. This is a high tiered number. Michigan sentiment itself is expected at 60.5. It is a market mover. And then we have, before that, we have Feds Williams. And then at the same time, we have Feds Kashkari and Feds Harker. And that wraps up the week, a pretty busy week. A quick overview of the ES before we dive into the charts. The ES is in a double distribution profile. It has balanced throughout the overnight session in one area and has moved to another since the European Open, as I've said, and is now balancing near lows. The ES has shifted the overnight point of control, volume point of control, to the low end of the range. This is likely to be fuel for further discovery to the downside. We may see the ES kind of continue down this trend back to 39.35 from a few days ago. 39.30, 39.35 is the key price below. If you recall, we talked about this a little bit before, and then below that's 39.04. So the S&P is traded 264,000 contracts, well within the quantitative statistic of being normal. That goes up to 340,000 contracts. The range is 46.5 points. Up to 59 in the overnight session is considered normal. The most common is 31, as it shows in the stats below. Point of control 39.6675. Big reminder, Monday is Martin Luther King Day. It is a holiday. So what we're looking at here today is it's a Friday before a holiday. So don't be a cowboy into the latter part of the session. It's very, very likely that we see action. We're very likely to see action at 10 o'clock Eastern on the Michigan sentiment prelim. But after that, it's with the European market, when the European markets close at 10:30 Central, 11:30 Eastern, it's very likely to turn into chop. Just remember, Monday is a holiday. You definitely don't want to go into a long weekend with a hole in your pocket because you defended a trade that shouldn't have been defended. There's no trade in the world that should be defended. There is no such thing as a trade that you defend. It's either right or wrong, bag it and move on, win or lose. Okay, so let's dig into the charts here, my favorite part. Here's the S&P TPO chart or profile chart. Again, just to bring you back to context, we were in complete balance through the latter part of December, early part of January. Then we had the Friday breakout. Then we had a continuation this last Monday. We had a resting day Tuesday, which was kind of odd because the resting day usually hangs on the breakout day's high area before the continuation, but Monday kind of drifted higher. Our entire week, we talked about 39.92. 39.92 was basically hit on Wednesday at the close. And then we talked about yesterday opening around that 39.92, 4,000 millennial figure number. And what we discussed here is because we're in this huge balance, right? So I know that it's hard this isn't like anything you see on TV or in magazines or whatever, these charts with trend lines and fibs and whatnot. We're approaching the market from the perspective that, in fact, it is an auction. And if it is an auction, then what we want to know, imagine standing over an auction pit. Like the best example I've seen is really a cattle option. You're standing over an auction pit. There are many participants, except the cattle auction is a one-way auction. There's only one steer that comes in and everybody bids on it. So there isn't like the other side is not able to just change supply. So it's a one-way auction. That's kind of but the fact is, during that auction, if you are bidding, if you are bidding on this cattle that's coming in, if you're bidding on it, part of the input you're taking in is the aggressiveness with which price is being discovered, the number of paddles going up, the number of people who are agitated and shifting and all that. And that's one of the key advantages of those who traded in the pit. You kind of saw that. You could see that somebody's really checking price very often and appear to be in trouble. You can hear the aggression in the pit. That's where pit squawk used to be a key part of my trading for about, I don't know, maybe 18 years. And so what we're doing though is representing that. We're representing the interest at each price using volume and market profile. And where we are currently is where there's been a lot of interest. Okay, so the better chart to demonstrate this is right here. We moved from balance down here to balance up here. 39.92 is the price. Again, that was hit on Wednesday's high. And then yesterday we opened just above. And what was yesterday's plan that we talked about? We talked about it very, very likely reverting back, pushing through and reverting back and getting stuck and building more balance over that 39.92 to 4,000 range. And there it is. See how fat that profile is around that 39.92 price. It's very, very rare that the market will come up to something this large, balance this large, and kind of just shove through and keep running. It would have to be very significant news. We did not have any real significant news, really. That news happened at the pre-market, the CPI. It was just as expected. There isn't anything to further continue this. So yesterday was traded from the perspective of balance, okay? And that's the reason behind it. So I talked about this yesterday. This is what set us up in the ES and NQ, which I covered. Crude is in a different kind of environment, but what we've done here is we have held this balance zone right here, and we are continuing to be in its influence. We are below it today. We are likely to continue to kind of scooch down into this 37 area. We have the 50 to 55. This is an area we talked about before. Then 30 to 35. So we are likely to continue to discover from that side. So what we've done is we settled right up here against balance, and we are opening in a gap. It's an internal gap, which means that it's a gap within yesterday's range. So there's a little bit of a price discrepancy between where we are now and where we closed and accepted prices yesterday. So this creates a bit of an opportunity at the open. This is one of our key setups. We're looking to see if the market becomes responsive. So it's responding to the fact that we've sold off. In responding, that means it's moving back up towards prior accepted prices, prior settlement. So that sets up a gap to settle, a gap to VPOC, and a gap to settle trade. If not, if it tries to respond and it's not able to get good lifting because the market's turned, temporarily bearish or short-term bearish or whatever you want to call it, and it starts to accelerate to the downside, now we have an even better opportunity because this is initiative behavior, and we're likely to continue to push down. And since it's on the sell side, it's likely to happen relatively linearly or in a quick way. So it creates an opportunity for us to trade all the way back down to 39.35 and then beyond there 39.20, and that brings us into the gravitational pull of this lower balance. So what we will have done if that happens is we moved from balance, held it for a day or two, and then we're moving back out of balance. This is the market discounting this news. Not very likely. We just need to focus on today. And so we need to look at, what's affecting today's trading and kind of tempering our expectations. Here's the thing. We have now traded, these days have traded into each other. So what we have to do is start generating another composite. So there's one day, there's an overlap, next day, there's an overlap, next day. And so now we have this price discovery profile with a very sharp point of control right up here. 39.90, basically 88.90. We still have the point of control of 39.92. This is expected, by the way, this point of control being in line with this. Very expected. This is how an auction normally works. And we're trading from below. So what this profile, this new profile is telling us, and the reason I'm not including this profile in this composite is because that's the breakout day. So until we take that back, it's not going to be included. But what this shows us, what this composite shows us here, is what key areas below were accepted, and it shows us a fair amount of resistance above in the 39.90 to 4,000. That becomes clearer with this profile. So I'm going to be looking for short setups with a push into those areas, and I'm going to be looking for targets down below those targets, 39.40, 35.30, blah, blah, blah. Okay, so anyway, that's a lot to cover, but we have a different structure. We're kind of trading downwards today. Here's the NASDAQ, which really has been kind of tougher to read. The NASDAQ really has overlapping days. You know, instead of having a breakout day and a continuation, it had a breakout day, and then it had basically a day that traded down. So what I'm going to do is incorporate all of these into this composite, because the NASDAQ is set up in that way. And what the NASDAQ is doing again, and remember, the NQ on this chart is in points. So I'm incorporating 4 ticks into each point. I only look at the NASDAQ in point values because it's too noisy. And so what we have is the market is up here, where in between these two upper distributions in the NASDAQ. So the NASDAQ, again, 11,475, 11,500, and below us we've got this almost at the low of the overnight session. We've got this 11,360 or so. That's where the NASDAQ is. If the NASDAQ clears 360, the NASDAQ clears 360, then we have a decent run at this low volume node at 11,270 or so. So from 360 to 270, and if it clears the 270, wow, that would be an amazing run to be riding. Now we're going back to 11,160, and beyond there we're looking at 11,050 as the next key area. So the NASDAQ looks weakish to me, and you know, there's a lot in the NASDAQ that's relatively weak in the underlying. Anyway, it's 8:20. I need to keep moving. Here's what happened yesterday. Pretty aggressive selling on the open, just as we expected. Remember, yesterday we said on the open, I'm looking for responsive selling. I'm looking for this thing to drop right back through 39.92, and I expect it to be very, very choppy because we're in that big balance zone around 39.92, and this is what choppy looks like. It's just a zigzag fest, and that's what we got yesterday. This morning, holding steady in the upper distribution here, seemed balanced, seemed pretty well balanced up here, and then it broke down on the European Open, and it just kept running. And now we have a weak low with the point of control at the low, so I'm looking for this low to be broken quite quickly on the open. Any pushes up in the ES today are considered responsive. I'm looking to sell those pushes up, looking for it to rotate back down. Again, the key target below 35.30 zone, with 50.54 being an obstacle ahead. So 50.54 right here early, and if it doesn't hold that, then 35.30 becomes the next key. So that's, you know, a handful of 10-point trades that we can participate in. We've got VWAP and mid on top of each other, right at the low volume node, right at the second impulsive breakout point. So I'm expecting resistance on a push up there. So that's what I'm going to be patient for today. Nothing to do with the open. Just wait to see how it treats this internal gap. Does it respond up or does it continue lower immediately? Does it drive? Does it hesitate? It's the kind of trade that you would want to wait the first 15 or 20 minutes. Okay. For the NASDAQ, same story. Lots and lots and lots of whipsawing. The NASDAQ looked a little bit stronger on the in the afternoon yesterday, but following the same pattern. The NASDAQ, any responsive buying into the 460 to 470 zone right in here. Right in here, you have slow, you have VWAP in mid. Any push in here, I'm looking for it to fail, wait for it to fail, get short, and look for it to push to the low again. That's the main trade of the day there. Anyway, it's a lot to cover, I know. Relative delta real quick so we can look at order flow. Order flow, a key part of trade location. So I don't trade off of order flow, meaning I don't create ideas off of order flow. I create them off of the bigger picture context. Tells me if I want to be long or short or what. But order flow helps me pinpoint where we would want to get in. We want to see that as early as possible which side is failing so we can trade against that side, and that's what order flow is for. You could see that the order flow in the overnight session, the relative delta, completely controlled by small lots as the overnight session often does, but you can see that somewhere in here we started getting selling participation on the very large lots, which are 100 lots or higher, and large lots, which are 10 lots to 99. You can see that these guys are trying to sell, small lots trying to lift. The delta is bouncing off of the zero line. So we want to see on the open, do small lots come in and start selling, or do they start running? Do these start running the opposite way? If the small lots start buying and the large lots start selling on the open, it's likely to be a pretty noisy open. The best opportunities are where price and the small and large lots are pushing in the same direction. This is kind of like where you get good flow and good cover on risk for your trade. The NASDAQ, same story, but the NASDAQ's relatively weaker. You can see the delta is coming in from below zero. Large lots, pretty aggressive. Small lots kind of not really holding up. The NASDAQ's expected to flutter up and then push down on the open. I'll leave you with that. This was a long one. Monday's a holiday. Remember to hit the subscribe button, hit the like button to subscribe. If you have not subscribed and you want to go to the subscription link immediately, go to fd71.com/YouTube and it'll get you subscribed. If you've already subscribed, of course, don't unsubscribe. But please subscribe to the channel, and it helps more traders get to know it and get this information. Good luck.